And good evening. This is the Elliott wave update for the NASDAQ 100 for Tuesday, November 16th, 2021. The NASDAQ, along with the other markets, did continue to move higher today. And a lot of it was on the back of Tesla doing some solid recovering off of all of the sales that have taken place over the last few days. But it still remains below 1100, but it did manage to put on 41 points today, and is already being marked lower in the after hours trading. Now, what is going on with the NASDAQ? Today, when the NASDAQ broke above 16,276, which would have been right there, which, in my opinion, left a three-wave rally up when it broke below yesterday, when it broke below 16,108. Now, today it breaks back above 16,276, which again negates the three-wave pattern, puts it back into a developing five-wave pattern, and then left me to deal with this overlap. The first thing I did is I put the minor 4 back in place. So again, now the NASDAQ and the S&P seem to be in the same wave pattern and structure to complete both very long-term rally phases. Now, where are we within it? If I'm placing this as minor wave 4, we are again in that minor fifth wave going up. So we've negated the downside, which would have included a break below 15,896. Before all is said and done, the 4 would have been pushed down to there, and then we would have started a stronger rally in the form of a minor fifth wave up. Okay, that didn't happen. What is happening? So in counting the minor fifth wave, it's going to consist of 5 waves of minute degree. And as we already know, and I continue to repeat, that one of the waves, 1, 3, or 5, most often it's that third wave, will subdivide into its own 5-wave pattern and extend. So within that 3 of 3, it extends higher. In this case, that's the direction higher. So under that count, it does make this overlap not only acceptable, but changes how it would be labeled. So minute 1, minute 2, sub-minute 1 of 3, 2 of 3, 3 of 3 is subdividing. So it's all now falling right back into line. So as I've said so many times, I will present both sides of what I see the market has done on that particular day, but always leave the end result, the final decision as to what actually is happening, up to the market itself. And today, the NASDAQ came back, cleared up that little chop and the area where I thought, oh, that can't be happening, and reverted back to what originally we had determined what was going on here in the NASDAQ. That is the case. But the wave 3, beautifully subdividing up. So what do we have left? If this is the 1 of 3, 2 of 3, and then we're in that 3 of 3, that's 1, 2, 3, small 4, we should get another rise up to complete the 1, 2, 3 of 3. Then we get a 4, then we get a 5, and that'll complete the larger 3. So within this third wave, it is subdividing in and of itself, and then within the 3 of 3, it is subdividing. Very typical, very perfect in terms of how a third wave should act, look, and chart. And so we're getting it all. So what I'm going to look for, an additional upside move. And I would say that that's 225, we'll take 226. And so we got 20. Oh, it's going to be quite a nice wave. 226 and 82 is going to be about 140 points from where this ends up. So we should get ourselves back above 16,400. That would be a major turn of events for the NASDAQ, which has got stuck today up at its highs and just could not find the support or the oomph to get up above that resistance at 16,336. So I think we should still get up there, get above 36, get closer to 16,400 to complete just this 3 of 3, then get a 4 and a 5, which may take us up towards that high at 16,448. Now that then would just complete the minute 3 of minor 5. Okay, so then we have an additional 4 and a 5. That 5th wave is then the one that could carry the power, at least to get us to 16,608. So again, we're back to that scenario that I have presented before, in that we'd be looking for the 3 of 5. So this 3rd wave within this larger 5th wave, that's going to subdivide, and that's the one that I thought could take us up to new highs above the current high at 16,448. That still does appear to be the case. From where we are, if we get another move like we did today, we were up over 120 points prior to the little bit of a selling that we saw into the close. About 120 points from here takes us straight up there. So I'm going to leave that as tomorrow's outlook, until I'm feeling that we're going to continue to move higher. We're going to continue to see the short squeeze in the various stocks. Everything's, all of that still remains in place. And I would expect that the continuation of the earnings reports that are still left, they're coming in retail now. And so we do have some retail stocks within the NASDAQ, and don't know of any that really have high weight or, you know, a higher weighting in the index itself, such as like Apple and Amazon and Google, Facebook, etc. But Microsoft added a good deal to today's upside. It was up $3.50. We saw Advanced Micro up almost $6. Apple ended up $1. So they're going back and looking for the chips. Tomorrow, NVIDIA reports. A lot is now weighing on NVIDIA. And what is also up is coming into question and may be not allowed is NVIDIA's purchase of ARM. That may not happen. And that what came out today. That kind of brought NVIDIA back down, and now it's not really rallying all that much. So we'll have to wait. We'll see what the earnings do tomorrow, but it could be a big booster for the NASDAQ itself, because it does have a little bit higher weighting in the index. So tomorrow I'm looking for upside. I'm looking for a break above 336 and on up towards 16,400 and that 448 high. If it gets up to that high or just above that high to complete this fourth wave, to complete this third wave, that would be picture perfect in my mind, because it leaves us totally free then to have the additional 4 and 5 in that fifth wave to get us up into this zone. Now remember, the way that the Fibonacci's extensions are being laid out here is that with this third wave extending up as high as it did, it allows this fifth wave the potential, if it's going to, on a Fibonacci relationship basis, wave 5 would be equal to 0.618 of wave 3 at 17,050. That's the most common Fibonacci relationship between wave 5s and wave 3s. Next most common is 382, still a level that would be new highs, 16,608. So here's our resistance to complete this whole scenario, this whole move. 16,608, 16,828, and 17,050. Can the NASDAQ do it? Yeah, it can. We've seen it. What's going to create the atmosphere? Nothing much more than what we've already been seeing. There's this incredible bullishness that's pulling in. And as tomorrow's Wednesday, then we have an expiration. It's a monthly expiration, but it's on Friday, the 19th. So all things are possible. What would kill this is if the market turned lower and just started to really fall quickly, breaking below. Again, this is the hourly chart. Let me open it up. Let me open it up so that we can see it, maybe. Put it up 30 so I can get a better picture. What it would need to do, no, I actually want the hourly because those are the moving averages that I want. So do me a favor, there you go. So what needs to happen first? See, they're all pointing up very nicely at the moment. And totally in line, hourly, in line. There's the 200, the 50, the 20, the 8, the 4. They're all lined up to continue to go higher. This is angling up, this is angling up stronger. Even the 200 has turned higher again. So what would have to happen to really spoil the party and put us into a negative frame? That the market would have to break first the 8, then the 20, then the 50, then the 200. A break below the 200 would likely begin to negate the upside scenario for now. And definitively, it would be broken if we came all the way down and quickly broke 50,896. So of course, that would have to be news generated, something very severe would have to hit the markets, a shock to the system would drive it down like that. And many, many things are out there that still could cause that type of a reaction. As far as earnings, that I don't see. So I think it would have to be a shock to the market, either something happening within the government or something of a pretty large nature. One thing to take note of, I will tell you, is that the continued rise in the dollar index is blasting higher. And if you look at that chart on the daily, it is straight up. It is straight up right now. That is not conducive to this bull market. When you see the dollar going up like that, it's starting to signify that the market is anticipating higher interest rates. Why would you want to hold dollars when all you really can get are these less than 1%? So when interest rates start to go up, then the dollar will follow because people want to hold the dollar. They'll lend it back out. Here, I'll let you have this. And you're going to pay me X amount. Okay, so that I think is not working against everything that we're witnessing. So I don't know how many traders or how many algorithms are really taking into the picture a rising dollar and rising interest rates. But we'll see. Tomorrow, I'm looking for higher prices. I think pullbacks will continue to be shallow. We did have some nice tradable points where we could sell and make some money, not even within these. But you can see basically from the opening, up, 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 and away. So, and it was pretty quick. I mean, within 2.5 hours, we were back cleanly above 6,200, 16,200. And so it all came to fruition today. And you can see how this all started to happen. Break above the 50. It started to get some acceleration. Breaking back above the 20. Got some more acceleration. And then it just walked it, then the 20, the 20 did walk it up, but more convincingly, the 8 and the 4 walked up the rally. That's where I'm going to leave it for today. Continue to use the moving averages as your guide for entry and exits. Use the Fibonacci and the Fibonacci extensions, again, for levels, for resistance, and then for support, and then use the Elliott. Have a great trading day tomorrow. The next update will be on Wednesday, the 17th.